It's BMO's Brian Belski, the birthday boy. Happy birthday. It's good to have you back.
Thanks so much for having us.
All right. You've obviously been on your bull retreat with Jim Lebenthal. You guys have been hanging out and talking a lot because you have to have the same perspective if you're sticking with 5,300 as your S&P target. And I ask you it every time because I think it's relevant every time, given what the market's done.
It is. And with much humility, we're wrong right now. How many people come on your network and say that they're wrong? Humility generates wisdom and pride generates disgrace. And Jim and I text and talk more than you know. And I think both of us have faith. We do believe in fundamentals. Some of the numbers that have been thrown around are not accurate, by the way, in terms of revisions and the like, and in terms of guidance. And I think the market, Scott, really the last 20 years has become so macro-dominated that these macro figures have become such an academic practice, and people are managing their money on this. For instance, when you take a look at year-over-year PCE, year-over-year PPI, year-over-year CPI, those are the academic practices to judge inflation. But if you start looking at the month by month, it's already beginning to roll over. And even Leisman is talking about that. So, again, we're wrong right now. We are bulls longer term. This is a correction. I think I agree with the rest of the panel. When we come out of these corrections, you typically see anywhere from a 25 to 30% recovery in stock prices. 5,300 obviously is a very aggressive target. We're going to maintain it. Once we start to see the market kind of find a footing here, we look at that, Scott, quite frankly. But we want to see a bottom be delivered here, and we think the bottom is coming very, very soon.
So you question the numbers on earnings and revisions, but the numbers don't lie in terms of slowing revenue growth. And I mean, I pointed out because it's relevant, right? Growth is slowing. Top line sales growth is slowing at some of the biggest companies on earth. And if it's slowing at those companies, you darn better believe it's going to start slowing, if it isn't already, at a bunch of other companies.
Two things on that.
Earnings estimates are going to have to come down. How can they not?
Well, okay, so if you look out over 500 companies, and you don't just look at fiscal year 1 earnings revisions, which that other person is, if you look at a combination of FY1 and FY2, a diffusion index, earnings revisions are still going up. The surprises that we saw in first quarter were a little below first quarter averages, but well above the longer term average with respect to annual averages. Jim is right. First quarter, second and third and fourth quarter numbers have gone up since the end of the year. This is something that we've talked about on air, but nobody seems to believe us because they're so focused on one or two of the three of the big names. I agree that the FANG moniker, you have to be a stock picker. You shouldn't own all the FANGs in size. You should only own a couple in size, and for different reasons. So I think this exemplifies the stock pickers market that we've been talking about, the transition back to normalcy. This is going to be a process that's going to take several months. And I think under that, it's still the best bet in the world to own U.S. stocks. I still think we're the best equity asset in the world. And that's why I think flows from other regions, including Europe and Asia, are going to come back to the U.S.
So is the Fed entirely in the market? Because it would seem to me that you can't get to where you want to get to for the S&P unless you believe that.
Well, I think that the market, here's something radical. I think the market is going to rally on Wednesday. The stock market's going to rally on Wednesday because you sell the rumor and you buy the news. I agree that we're going to see 250 basis point increases, and then I think we have a whoa, 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 Miss Lippy moment where the Fed kind of looks around and starts to see that monthly data roll over and that inflation truly is peaking. Then we have some other things going on, like maybe the war ends, maybe we start to see supply chains open. And remember, consumption is important, Scott. 2/3 of our economy is the consumer. Mr. Moynihan at Bank of America was very clear with respect to what's happening at that bank in terms of spending. I have the very good fortune in my job at BMO to go around and talk to private companies on the commercial banking side. I recently did a roundtable a couple of weeks ago in Milwaukee. All 50 of the CEOs were very bullish, and they want to go get loans and grow their business. So that's what we're sticking to.